Welcome, ladies and gentlemen, to Commodity TV and the new edition of our online interview series. Today, we want to get an update with Taj Singh, the CEO of Discovery Silver, one of the best, if not the best development project in the silver space here. And yeah, Taj, good morning to Canada. How are you?
Good morning, Johan. Very good to see you. Good morning.
Yeah. Great to see you and hope all is in good shape. For sure, the company is in great shape because you guys brought out phenomenal metallurgical results. I mean, they sound like a little bit funny if you are not totally familiar with metallurgy or you are a geologist, but you are both, I think, even. You are also a metallurgist. So it would be great if you can give us a bit of an explanation because we have sulfides and we have oxides. Let's start with the sulfides. You had in silver 80 to 89%, I think. Lead was 83 to 91%, and zinc was 81 to 90%. Can you give us a bit of a context why this variability and what it means?
Yeah, so just a high-level context, Johan, sulfides are the major part of the deposit, and oxides are only a thin layer on top, and I'll talk about that in a second, but below the main part of the deposit, the engine room of the deposit, is the sulfides. And so those recoveries, speaking as a metallurgist, are very, very good because the range is actually extremely tight. We've shown a range over 4 major rock types. Over this mine plan can extend 15, 20 years. What it's saying is these recoveries are exactly in a very nice, tight range, right? It's one thing if you sample from one part of the deposit or this part of the deposit. We sampled throughout the deposit through the different phases, trying to then be representative of the entire mine life and all the various rock types in it. So if you think of it that way, the metallurgical performance between rock types is extremely consistent in terms of silver recovery, lead recovery, and zinc recovery. And it confirmed the previous results that were done and actually slightly even improved on them.
Okay, and I think what is also massively important is with lead and zinc, you have really saleable and payable byproducts, right? That is also important. I could imagine for the economics of the project, this is fantastic, right?
This is very important. A typical kind of gold silver deposit, not typical, but you'll have, this is a polymetallic deposit where silver comes with zinc and lead. These kinds of zinc and lead recoveries are very high. The metallurgical performance of this ore is fantastic, very simple, and we'll talk about some other reasons why. But yes, it's specifically the zinc and lead recoveries are fantastic, which allows you to have good grades of concentrates, no penalties, very favorable transit cost of being paid. So it's all of this was confirmed, which is fantastic.
Great. So with the oxides, what are the oxides? What share do they have in the deposit? And I think you have a big variety of 54 to 80% in silver, and gold is 61 to 75%, which I think is still quite good, right?
Yeah. So the oxides, you have to remember, is a completely different process used to process. So this product, this project before was previously only considering sulphide processing, which is crushing and milling, and then flotation to concentrates. There is a layer of oxides that sits on top of the sulfides that's also well mineralized in terms of precious metals, silver and gold. But previously that material had low recovery. But previously the operators had not tested the heap leach kind of amenability of that ore, and we tested this the first time ever, and the results were fantastic. And so when you're doing heap leaching, the cost is much, much lower than, for example, crushing and milling and flotation. It's substantially lower. So your kind of cutoff cost you need for that is much lower, where you still are able to make a lot of money. So so you can kind of consider it as almost 2 mines. We almost have an oxide mine, which is a heap leach process, is what we're thinking of, and then the sulfide main part of the deposit. The oxide is interesting because you can now start processing ore earlier than we had originally intended. Cash flow earlier. That stuff was considered pre-strip, meaning waste material, Johan. It's now, instead of being a $2 per ton mining cost that you put away as waste, it's now making money. $10, $15 per ton margin, for example.
Amazing.
So that's all of a sudden a cost center has now changed into a profit center. And again, in terms of tons of ore, again, the sulfide is a major driver here in terms of tonnage. But About anywhere from 5 to 10% or so of the total tons that are probably going to be in the mine plan will be of oxide. And again, the crushing that you need to do for the sulphide later on, that's the same crushing you would need for the oxide. So you would have already had put that in anyway for the heap leach material. So the extra capex needed is very minimal, but yet you're now getting cash flow earlier, and it's just adding to the main part of the project.
Yeah, I think it's always good when you turn waste into money.
Exactly.
This is something I really like. And then it's always like a positive capex, because when you make out of that capex then money, then everybody's happy, right? So
exactly. And it's actually going to be happening. The cash flow will be coming when you're building the other part, the main part of the mine. So it's super. It's actually a very good, puts us in a very good cash flow position if all works out. The range you talked about very quickly, Johan, is because in heap leach material testing, the major variable which affects recovery, one of the major ones is the particle size that you crush down to. So the ranges you're talking about are really just showing the effect of the recovery of the particle size on recovery. So then it's up to us to go, okay, this particle size will get us this recovery. Obviously, it costs a little more to get it finer, but is it worth the extra recovery? So that's a kind of a cost benefit analysis we'll need to do, but that really chart just shows you that yes, finer particle sizes obviously result in higher recovery, and here's kind of the effect of them. That's why there's that range over there. Now, the other point I want to make is jumping back to the sulfides, a very important point. The one very positive news surprise was this oxide material, that it can be heap leached, waste, turns into ore that makes a good amount of margin for us early in the mine life. But the other big thing is this ore, the grind size, is very important. So this ore needs a coarse grind size, so it's much less operating cost to get it ready to go into the flotation circuit. 200 microns, that's a very coarse grind size. You typically will have 50 microns, 30 microns, which needs obviously a lot more operating cost to get it to that size. And also, even in terms of capex, all of a sudden your kind of requirements to get the ore to this part, to a certain particle size, is much less. So that will actually have a pretty significant effect both on capital costs and operating costs, which we think is a major item. And in general, to summarize the metallurgy, Johan, I think it really was overlooked by the market. It was a major positive and meaningful news event. The stock actually went up and materially outperformed that day, but then we know how the sentiment's been in the market, and it came back slowly. But it was really, as a company, and really seeing, the de-risking of this project, it was a massive positive catalyst.
Super. Okay, given also the fact that you brought out again fantastic drill results, and one sentence catched really my eye, which was saying 15,000 meters will be in addition brought into the new updated resource calculation. I think this is also very important, that for, let's say, the updated PEA, pre-feasibility, and then finally also maybe already feasibility level, because I think you did also the drilling already on the pre-feasibility level, right?
Correct. So a couple items. One is obviously it becomes one of those projects, as you've mentioned before, and always good drill results. Everybody expects it. But you have to think about 73, the headline hits 73 meters of 241 gram per ton silver equivalent, starting basically 60 meters from surface, essentially at surface. And just on several channels on social media, and became the top silver intercept, for the week. But anyways, it's just, people are used to Cordero putting out these results. Sometimes you have projects like this, it's just every single result, they have multiple headline hits. That's fine. So that's one thing. We're happy. That's in the phase 2 drilling. That will go into the PFS, that set of holes. The 15,000 meters, I think, is a very important point you noted, because that's a significant amount of meters. 15,000 meters additional now, adding to the resource that wasn't going to be there. Results came in and we were able to incorporate them. What that is, again, further de-risking the project. It allows us to define the high-grade zone even more so. Hopefully bring up the categories of the confidence in terms of the resource, maybe moving to indicated, maybe even to measured. This is all going to be very important. And adding those 15,000 meters was a very significant positive for us.
Okay, super. So, I mean, just short question in between, cash in the bank is still, I think, some $70-80 million, right?
Yeah, it's $80 million Canadian.
Super,
roughly.
perfect. So you are settled until you do the construction decision. Easy peasy, right?
Exactly. That's why, honestly, these day-to-day share prices, they happens to everyone. Like, everyone got hit. But in our, it doesn't feel great to see it. But to be honest, we have cash in the bank. We don't need to go raise money.
Yeah,
the story will come out, and the share price will move. To the price it should be going to once all of this news is going to be coming out.
Yeah, that's right. And I think also you were a little bit affected of the rebalancing of, I think it was 2 ETFs, right? And so they had to sell 4 million shares. And in these crazy markets, that is a little bit, how can I say that? Pressurable.
Well, completely. It's these ETF funds, as you know, in March or February, we added to them. It obviously was great. All of a sudden, buying of 3, 4, 5 million shares. But when you rebalance, all the market have been effective. They lowered their positions in many different funds. We're still on those 2 ETFs. One is the Junior Silver Miners ETF, SILJ, and the other one is the GDXJ. We're on both of them, but they rebalanced lower. So between both of them, about 4 million shares over about a month was sold off at a time where there wasn't really good volume, because, as you know, in the summer, everyone kind of slowed down. There wasn't much buying. So it really hit not just us, it hit several other peers of ours, but it in these ETFs, they just sell whenever they want. They don't look at the price, sell at certain times. So it definitely, in my opinion, the reason to bring it up is that I think it really exaggerated the drop in the price in our share price. I think it's showing that it's even more attractive entry point right now where we're at because of the kind of artificial and temporary drop in the share price right now.
Absolutely. I think it's a great point for entry or re-entry. or even average down if our viewers have paid a little bit more. Okay, last question. What can we expect until the end of the year? What is coming up? Any challenges you are facing?
No, in fact, so the two major things. I mean, a couple of years almost since we've acquired this asset, all of it's been leading up to these two major catalysts. One is the resource, planning to be coming out in the next couple of weeks in October. We're very excited about that. Basically, think about versus the previous resource, double the number of meters almost. It's a much more robust model in the fact that geology and structure are being incorporated for the first time. Before it was essentially a grade model, so a lot more robust. Capping constraints are much tighter. It's just overall a lot more robust model that's been heavily de-risked. And again, to your point, it's really kind of more akin to we're more at a PFS level right now. So that's the major one, and then the one that comes after that in November will be our PEA, and we're very excited about that. That'll obviously put some economics around the project, and it will obviously use the resource and the metallurgy and all the work leading up to that to put into the PEA. And again, as you mentioned, we really believe the quality of that PEA is very high compared to a typical PEA in our industry, and we really think the confidence level of most of the items is at a PFS level. So, it's going to be pretty clear to investors when they read that's a very high quality product that uses real credible assumptions, etc. And then we'll keep pushing through into 2022.
Super, perfect. Taj, that was a great final sentence. Thank you very much for the update. I would say things look extremely good, and we look forward then, especially for November, to your PEA. And of course, with the updated resource, with those additional 15,000 meters, I really love it. I'm a shareholder of the company. Yeah, wish you all the best, Taj. Thanks, and please keep us posted.
Thank you very much, Evan. Talk to you again.
Thank you. Yeah, ladies and gentlemen, that was Taj Singh, the CEO of Discovery Silver, and you heard it. Things are going extremely well. The stock is way too cheap, but there is a good reason, because 2 ETFs had to sell, because in the last sell-off and bottoming out of silver and gold prices, all stocks got hit. But if you have 2 extra sellers in the market for 4 million shares, that's quite a lot, of course, and it pressurizes in addition to the market pressure. So I think it's a fantastic entry point here. We are very very, very bullish for Discovery Silver. We are bullish for gold and silver. You know us. And we think this is the final washout before markets will restart quite soon. Maybe it takes another 1-2 months, but we are very positive, especially for 2022. And I think Discovery Silver with $80 million in the bank, financed until the construction decision, it looks fantastic, and you really should have a very close look into this company. Thanks for watching us, and bye-bye from Austria today.